have decided to have at least a good Friday.
ये आयोजन करोड़ों लोगों का भाग्य बदलने की क्षमता रखता है.
If there are no external factors which are kind of really impinging the market, I don't think so that there should be a larger impact in Q4.
Reliance Industries has formalized the succession plan, which was announced, remember, in its AGM earlier this year.
Okay, well, you're with us here in the last hour of trade. This is Closing Bell. We're coming to you live from the CNBC-TV18 News studios. And finally, as we end this week, we are, nicely drifting higher. This is a much-needed end to a much-needed relief and a break from all of the selling and the red that we've been seeing on the screen for the last so many days. I'm Prashant. Over the next 60 minutes, we will talk about markets and, of course, much more. Some movies as well. Prashant, Surabhi and Nigel are here.
Guys, now it's feeling like a bit of a Friday, right? At least with whatever today is done, that cut on the Nifty from 3.5% is down to 2.5%. 5% Midcap cut is down to just about 3 or thereabouts. So yeah, I think on a good note. I don't want to jinx it, but I won't say any more.
Yeah, the question is, do we build on from here? Is this going to be a fantastic final 60 minutes? The session has been good. Yeah. A couple of good earnings is what we've got from Maruti as well as Cipla. Can we end it with a bit of a flourish? Keep in mind that resistance is there at around 19,200. But you like to end higher, right? Then
Resistance and all, Friday, we wouldn't.
Friday nikal lo, फिर Monday देखेंगे. That's the long Okay, well, let's just quickly take a look at what the levels, etc. Nigel was talking about that 19,200, and maybe we'll put out a few more. So bounce finally, right? I mean, no two ways about it. This broad participation, you look at the advanced decline ratio, that is strongly in favor of gainers. Looking pretty good. PSU Bank Index is up 4%, right? So we had numbers from Canada Bank, PNB Bank, both managements were with us in the morning. And the commentary, the outlook, etc. sounded pretty strong from both of them. And we'll play out sound bites a little later here. Reliance Industries results later. The stock is up. It's actually corrected quite a bit along with the broader market sell-off. So I think that's always important one way or the other on Monday morning. And the previous October low was 19,333. That is also roughly where an important trend line from the lows meets. It's about 200 points away from where we are. But, that's what you'll have to deal with, actually more than 200 points. Because the fall was so sharp and it happened in 6 days, basically, 1,000 points. So there are gaps now. I mean, you look at the first resistance and the second resistance, etc. So roughly the previous lows of October, which is 19,333, you'll need that. But I think a solid positive daily close is the beginning on which one can build, hopefully, from here out. Surabhi.
Well, absolutely. Prashant, I'm just looking at the manner in which a couple of midcaps have reacted to results as well. And we've got a lot of positivity. You mentioned some of the PSU banks. Yeah. Got numbers from IOB and the same story playing out. Asset quality improving. Gross NPAs for IOB, by the way, have fallen for below 5%. So, it's good tidings and the market is rewarding these stocks. By the way, they've already run up so much in the last couple of months. But even then, after the, a bit of a cool down that we had earlier this week, good results are being rewarded. That's the short point. Look at a stock like Shalby, 8% higher as we speak. Again, this is a result reaction playing out. Remember, you were hearing from NLC in the morning, NLC India. Stocks up about 8%. They're promising that their mining output will improve going forward. Shriram Finance has been a solid story right from the morning, 7%. It's a long list. PNB, IOB, Karnataka Bank, even Colgate. Colgate was actually struggling for the better part of the day. But even that stock is now up about 2.5%. I guess it really talks about the kind of sense of confidence that the mid-cap market and the small-cap market is trying to exhibit, at least for now.
That's right. So it'll be just a few stocks, though. SRF, I think the numbers come out. That stock has moved to the low point of the day. You have MCX as well. That's already had a big run. Maybe valuation-wise, it'll find it hard to justify these sort of prices. And Bata is the other stock. A few of these names, they have slipped actually a little bit from the top and trading in the rest. So just thought we'll highlight that. But as you said, Surabhi, the real story is in the broader markets. And for me, just the advanced decline ratio. If you look at the advanced decline ratio, after many days, we're seeing more than 2,000 stocks that are advancing. In comparison, just around 400 stocks, I think, that are declining. And yesterday, we were very happy about moving from 200 advances to around 1,000 advances. Today, we have that number 2,500. Also, portfolios will be feeling good getting to the weekend. And the hope is we sustain from here on as well. But let's move to our technical guest who joins us to help us. How do you position yourself for the final hour of trade? Rahul Mundar joins us to help us out with that. Hi, Rahul. Good afternoon. Well, if you're a bull, you'll be feeling good. or if you're a daring bull actually, because still yesterday it wasn't looking too good, but today the bulls are back. Your view on the markets? 19,070 is where we're trading at.
No, I think people have been beaten apart so bad that it had to be courageous to kind of take a bullish stance today morning. And, I think the few that have taken it are also bearing in mind that is this a bit of a, a relief rally, or is this a breakout? And I think that's the question that's playing out. And, when I look at it technically, I clearly look at some of the individual stocks, the heavyweight stocks, they haven't got the kind of volume. They're not even, above their typical average volume. So, what I'm trying to suggest is this rally up should not be read as a breakout. We breached, important support levels. And I think what you're seeing is still, in my sense, a corrective rally, which could stall anywhere between the 19,200 to 300 pocket. So I think keep that in mind, 43,000 on the Nifty bank, 19,250 ballpark on the Nifty spot. These are important levels. We need to clearly get past and close above it. But, if I start looking at the intricacies, I don't read this as a breakout. I would probably exit a long position.
You'd get out today, basically, Rahul. You'd not wait, you'd not carry positions home. Okay. Okay. And
I would be more comfortable going light, yeah.
Okay. Got that. Any specific trades, Rahul?
So there are individual pockets of strength, like you were identifying. It's all singular stock stories, and it's not a fixed set of stocks which I could say buy banking across the board. So it's a very different play. There's a Coal India, and there's a Maruti that looks like is going to be stronger and stronger. But let's look at some heavyweight names where I have a call on SBI. That's a stock one should probably sell because 565 to 570 a major hurdle. Ideally, I'd like you to break 557, for a confirmation. But, even at these levels, no harm. I think that could be a good sell trade. On the buy side of things, as I was saying, auto looks interesting. Tata Motors, if you look at from a slightly longer term angle, 600 to 620 has been a very good support for the last 4 months. And I think that historically has proven to, suggest that these are levels to really look at, an entry. So if you're looking at the buy side of the market, auto looks a relatively safer space. Tata Motors can head closer to 660 in the coming month as well. So that's a stock I would look at buying. Another stock which is interesting on the buy side is ITC. And, that's again, if you look at 425, 430, good support level, keep a stop loss below that. We could, comfortably rally to about 455 levels. But on the sell side of things, I'm still worried about a Reliance and HDFC, which is where my index call comes in as slightly negative.
Okay, we hear you, Rahul. But as Nigel's saying, maybe you leave the worries to Monday. Today is a good-looking screen for now. But anyway, we'll come back to you in, I think, about half an hour. We'll try and get some more trades going. Thank you very much for the opening ones. We have our guest with us in the studio. Prakash Devan makes it all the way from Goa. I believe Nigel has a question for you, and it isn't relating to stocks, Nigel.
I know what's coming.
No, we'll talk
ask
about
it, Nigel. Ask.
We'll talk about
Actually, don't.
It concerns some beverages. I'll just leave it at that.
Yes,
We'll leave it at that.
we'll sip on one later. I hope you've got my quota.
Yeah. I have lots of cappuccino with me. So.
Okay, guys. Bringing it back home, there are lots of earnings to go over as well. So let's get this started. Bajaj Finserv came out with numbers, and at least on the life insurance side, it looked like a pretty good set. Let's bring in Abhishek. Abhishek, fill us in on the details.
Well, Bajaj Finserv reported their numbers, and the life insurance business momentum is really on the stronger side. Let's take a look at the consolidated numbers. Our total income is up 25% YOY and about 11.8% sequentially. PAT is up 25.3% YOY and about 1.25% sequentially. However, net profit is up just 24% YOY and a decline of 0.7% sequentially. Now, in the general insurance business, the gross premium growth is really strong. However, the claim ratio has spiked massively on a YOY and sequential basis. So gross written premium is up 52.65% YOY and about 90.35% sequentially. The claim ratio has shot up to 78% when compared to 75.5% YOY and about 74% sequentially. The AUM growth over there is about 13.3% YOY and about 3.15% sequentially. The life insurance business, robust performance over there. Take a look at the gross written premium. It's up 28.5% YOY and about 31.5% sequentially. The renewal premium growth is about 31% YOY and about 32.5% sequentially. Even the new business premium growth is robust at 26.2% YOY and about 30.7% sequentially. So the profit growth is massive at 21.5% YOY and about 24.5% sequentially. The AUM growth again over there is about 13.6% YOY and about 3.5% sequentially. So life insurance business performance is on the stronger side for Bajaj Finserv. Back to you.
Okay. All right, Abhishek. Thank you so much for that. Prakash, what do you think? Bajaj Finserv in specific, in general, if you're looking to play insurance, then will it be through Finserv?
Also through Finserv. So what's happening is, very interestingly, most insurance companies are coming up with waves of performance and underperformance. I mean, you had HDFC Life for the longest period doing so well, and then there's this pause. ICICI has gone through a little bit of a slowdown, where Bajaj Finserv was struggling last year. It's probably done, and that's why the YOY number looks so impressive. But on a sequential basis, even the AUM is just about 3% up. But I think at this scale, it does offer you a very significant way to play the market. That segment. So I've always been saying it's a basket approach that works well. Bajaj Finserv definitely is one of the 3/4 names that you should have in that. So you got HDFC, SBI Life, Bajaj Finserv, and an iPru to add. That's
Okay, all right, got that. By the way, we have Indian Hotels. The numbers are flashing for you on the screen. They're supposed to be good, and Q3 is supposed to be even better. Those numbers look pretty good. You have some growth on the top line. Mid-teens growth is what you're seeing. The profit number, though, is up more, so we'll have to keep an eye out on that. I'm waiting for the EBITDA number. So there's a bit of a margin expansion because top line grows in teens, mid-teens, that is. You have EBITDA growth that is at around 20%. So that would mean we have some kind of margin expansion, 25% margins. We'll try to get in Mangalam to give us further details. But Prakash, what do you make of these numbers? Indian Hotels, the stock has seen a big run from the lows that we saw, say, 18 months or so ago.
Yeah.
How much more is in store? Because Q3 is going to be a given that's known. You have festive season, you'll have the World Cup.
Matches, yeah.
Amazing stuff out there. But are there still a couple of stocks that you like from the hotels theme?
So, okay, let me put this differently. If you were to buy Indian Hotels without, considering the history and saying it's a business that's starting off today, would you buy it at these valuations? That's it. And the answer would be a definitive yes, for the reasons that the efficiencies have changed so dramatically in the last 4 to 6 quarters. All leakages, all areas where they were losing, the kind of properties that have started contributing to the revenue bump up, the profitable increment in the business. So you could try out any of the Taj properties today, the marquee ones, and none of them have an ARR which is less than about 28,000-29,000 on any given day, which used to be about 14-15 till last year. So there's a huge shift that's happening, and that will continue given the way the entire travel industry is evolving. So I'm quite positive on this. Yes, in hindsight, when you look at it from the lows of 100, 110 that it was around COVID, it definitely looks very exorbitantly, this thing run up. But I think there's enough room for it to grow organically at 25% for the next many years.
Okay, all right. And we have SRF's numbers that are flashing for our viewers on the screen. We just spoke at the start of the show that it had come off the high point of the day. And it appears the numbers are a little bit lower than what the sheet was working with. In fact, on the EBITDA front, there's a miss of close to 8% in comparison to our poll. The margins have missed our estimates by close to 100 basis points. And on the top line as well, I think there was a miss of close to 6-7% approximately. Let's get that number up for you, which explains why the net profit number as well is a miss of close to around 7% or thereabouts. So these numbers are a bit of a miss. The stock is recovering a little bit, maybe some shorts covering out from the system. But on the on the top line itself, it's a 150 crore miss, which is close to around 5% oil. Prakash, any view on SRF? That's another one that's moved well, but it's come off the recent top.
Yeah. No, I think goes for, this is representative of the entire slowdown in the chemical space, especially the larger ones, huge capacities, don't get absorbed. And I wouldn't be surprised if this, the top line miss has come not just from realization, but also volume degrowth. So, most large companies like Aarti, SRF, Atul, they're finding it extremely difficult to be able to sell in especially the European markets. And this could probably continue for one more quarter, Nigel. And that's the bottoming out phase that is evident in chemicals. So if somebody is willing to look at a slightly longish horizon, probably now and the next quarter would be time to start nibbling.
Prakash, by the way, for someone who's based out of Goa, there's no tanning or anything, right? You look, or am I missing something?
No, so everybody who stays in Goa doesn't spend time on the beach.
On the beach, yeah. The real cool Goans don't go to the beaches. It's for that's
I
for
don't
tourists.
know about that, yeah. So
It's touristy business.
No, I'll explain it in just in 5 seconds. You come very infrequently. You do want to visit the beach. We keep on postponing it, so we don't end up going.
The weather has been. I mean, Mumbai was.
Is it as hot in Goa as it is in Mumbai?
Yeah, it is. It is. I mean, the same kind of weather, right? I mean, October in
Not
Mumbai.
really. Not. It's much cleaner, much more pleasant.
Weather-wise, it's hotter.
No, it's not.
He's rubbing it in now.
I'll tell you what, guys, we'll get back to that conversation. For the time being, Ekta is waiting by. She wants to tell us about Cipla. So let's focus on Cipla, and then we'll get back to the beaches, the beers, whatever else. Okay, Ekta, tell us, Cipla, the stock has spiked to the high point of the day. The initial numbers that we saw as well were better. Even the US sales look quite good. Tell us more.
Well, yes, Cipla, is in focus because it was a good set of numbers. The revenue was up 14.6% year-on-year. Street was anticipating around a 10% growth, and EBITDA of around 14%. It came in at around 1,733 odd crores, so it resulted in margins of 26%. So the stock cooled off because there is an element of a higher other income this quarter as well. But nonetheless, it's been a good performance in terms of segments which I'll just come to. So the profit was up 43%. The street was anticipating around a 24% growth. This was aided by the operating performance. Now coming to the geographies. So for example, we had India which showed double-digit growth, but besides that, the US markets also came out with good set of numbers. So $229 million is what it reported as compared to estimates of around $210, $215 million and versus $222 million in the previous quarter. So there's been an increase which has taken place. That's primarily probably because of Revlimid generic, the cancer drug, which they will be selling with other companies on a limited volume basis until it goes generic in Jan 2026. So that's one of the key benefits of Cipla this quarter. It's estimated that they made probably $50 million from Revlimid generic in this quarter. I might also add to the conversation saying that Cipla has one of its most important plants in the state of Goa.
Okay, there's Goa. There's Goa again.
The fever is spreading.
I'm sure Ekta did not plan to say that, but I think she just slipped it in.
Couldn't help it.
Ekta, thanks very much for that. By the way, Prakash has concealed some important facts. I asked him
while the market
Goa
focuses on Goa, I think the headlines lie elsewhere.
He's been a little sort of...
No, I was traveling outside of Goa, so if that explains the absence of the tan. Next I'll make sure I'll get a tan.
Gujarat?
No, it was out of the country.
We're talking about whether Goa is hot or not. Well, Prakash is visiting us from Japan, if I got that right.
Yeah, I just got back from Japan visiting from Goa right now, so that's okay.
Anyway, what are you looking at in terms of numbers? Anything you've noticed? I mean, I was saying in the morning that because the market has been so, actually down and down for the last many days, earnings have gotten the sort of short stick in that sense. We've not really focused too much on earnings. Many have gotten under the radar. Yeah. But this is really the thick of earnings season. What's caught your eye?
And from look at one sector that has had a fairly strong smattering of earnings coming is banks. There's nothing that has been disappointing in that real sense. And of course, you still have BOB and SBI right towards the end, maybe next week or something. But if you see all the numbers that have come through, Prashant, and some of the smaller ones, my favorite, Bank of Maharashtra and all of them have also reported a continuity of the improvement they've been clocking for the last couple of quarters. And one interesting anecdotal thing that I want to tell you is that the divestment target of 51,000 crores, it's just about 16% of the government's met as per the recent headlines, which is about 8,000 crores, thanks to the fact that IDBI didn't get divested, Concor was stuck. So the rest of the money apparently is coming from a lot of dividend inflow that the government is seeking, and the entire shortfall of about 25,000 crores is likely to be mopped up from bank dividends, which means best is to look at PSU banks, which have the ability to pay dividends, and by March you'll probably get that coming home. So it's a very nice trade in that sense. So you're not risking yourself. So every dip after these numbers is actually a very good dividend play now.
It's good to get paid to wait. right?
Absolutely. Absolutely.
You know, and in fact, you know, talking about the banking names, my piece later today on Editor's Roundtable is about how the Nifty earnings have been skipped back a little bit, but actually on the banking names,
They've improved.
They've improved.
Yes.
And some of them, you know, on a valuation basis, they're not as expensive.
Not
so
at all.
BFSI is not as expensive, but ex-BFSI, you know, that's got quite expensive and a big valuation gap in comparison to the BFSI space. But thanks so much, Prakash, for joining in. I had to plug in my piece as well for the evening, so I'll send a piece to you. But and we catch up on the weekend as well.
Thanks, guys.
Well, for the time being, though, we'll slip into a short break. On the other side, Rana Konkar of PPFAS Mutual Fund will be joining us to give us his thoughts on the markets.
welcome back. Here with us on Closing Bell. Well, let's take a look at the big number that is anticipated today, and it is all about Reliance Industries. We have Sonia joining in to take us through the numbers and what the expectations are. And then we'll, of course, talk about the big developments with respect to the next gen being inducted into the board. Sonia, over to you.
Well, thanks for that. It is expected to be a stable quarter for Reliance Industries this quarter around. But let's first take a look at what the stock performance of the company has been this year. This year so far, Reliance Industries is down 11%, while from a 52-week high, the stock is down about 21%. However, this quarter will be a stable quarter for the company. On the revenue front, we're looking at a 6.7% growth at a little over 2.2 lakh crores. I'll come to the reasons in a bit, but before that, on the EBITDA front, it's a 4% growth that we're looking at, a little under 40,000 crores of EBITDA, while on the profitability front as well, there will be a slight amount of growth this time around for Reliance Industries. On the margin front, 17.9% is what we're going with. And the number to watch out for on the profitability front is 17,974 crores, which is a growth of around 12%. Now let's take it to the qualitative aspects. The consumer-facing businesses, which is both retail as well as telecom, are expected to do well for Reliance Industries. Apart from that, there is also good strength that we are seeing in the refining business for Reliance Industries. However, that will be offset by weak petchem spreads for the business. If you look at the Singapore gross refining margins, they expanded to $9.8 a barrel compared to $4 a barrel last quarter. So the standalone EBITDA is expected to rise by about 9% due to an increase in the KG Basin gas production and a likely sequential improvement in the gross refining margins, as you just saw. But all of this would be offset by the quarter-on-quarter weaker petchem spreads for the company. The consolidated EBITDA is expected to go up by about 4% on a quarter-on-quarter basis. But a couple of key internals to watch out for, or key things in the commentary. Further clarity on the 75,000 crore announcements in the new energy business is keenly awaited by the street. Apart from that, any growth in retail store additions would be closely watched out for. And also pricing action in the telecom space is something that is a key monitorable this time around. But all in all, expect a stable set of numbers from Reliance Industries.
All right, thanks a lot for that, Sonia. Also, in a big corporate development, Reliance Industries has formalized a succession plan that was announced at its AGM. They fortifies Reliance board with NextGen. Nisha Podar joins us to fill us in with more details. Nisha?
So Reliance Industries has formalized the succession plan that was announced, remember, in its annual general meeting earlier this year. Now, the shareholders have also approved the appointment of new generation leaders. Isha, Akash and Anant Ambani on the company's board as non-executive directors on the mothership Reliance Industries. Now, the shareholders of Reliance Industries approved the appointment of Isha Ambani to the company's board with 98% votes cast in the favor, while Akash Ambani's nomination garnered over 98% of the votes, and Anant Ambani's appointment to the company's board received over 92% votes in favor, all above 90% and above the requisite amount. So that's the picture coming in when it comes to the shareholder approval. Now, in other changes to the board of Reliance Industries, giving way to the new gen to come in, Neeta Ambani will step down as announced during the AGM, and she will continue, remember, to remain as the chairperson of Reliance Foundation. Now, as the chairperson of Reliance Foundation, she will continue to attend the Reliance Industries board meetings, and as a permanent invitee, she is welcome on all the meetings. And also remember that Chairman and Managing Director Mukesh Ambani will continue at the helm at this position for another 5 years that had been stated in the AGM itself. So as he announced during the AGM, all these changes are now going to really fortify. And the succession plan at Reliance Industries has been in the works, remember, for the last few years, with all the 3 new generation leaders really taking on important roles within this conglomerate, with Isha Ambani who was appointed as the leader of Reliance Retail in August 2022, remember, Akash Ambani, remember, became the chairman of Reliance Jio Infocom in June last year, and Anant Ambani was appointed as the leader of the company's energy vertical. So 3 important verticals and the 3 next-gen leaders as the leaders of these 3 verticals now joining the mothership board of Reliance Industries.
All right, Nisha, thank you very much for that. So important, very, very important to track later this evening, and it's going to be the big story when we come back on Monday morning as well. Ronak Onkar is now joining us. He's co-equity fund manager and head of research at Parag Parikh Financial Services Mutual Fund. Ronak, good to have you with us here. Good afternoon, Prashant here. You know, I was looking at some of your portfolio. You own some of these exchanges. I mean, actually, the only exchange you don't own in the portfolio is the Bombay Stock Exchange. You own MCX, IEX. So let me ask you about what you don't own, which is BSE. I'm sure you would have looked at it, right? Because that's the only sort of listed stock exchange available. What are your thoughts? Because many are very, very bullish. You've seen sell-side coverage, a fair bit of it, talking about pricing power starting to come back, the options market, the BankX, which has been launched. Of course, we'll only know a few months down the line what's the uptake there. Has it really been, is it being used in a very big way? But your thoughts on BSE from here?
Thank you for inviting, Prashant. Network effects in an exchange matter a lot. So if you see any exchange business, if the network effects are not in the dominant player's hands, then a lot of the economic advantages over a period of time don't come to you. So in case of equity exchanges and derivatives exchanges in equities, you will see NSE is being a dominant exchange right now, which has cornered a lot of network effects over the past couple of decades. It has been around. But with BSE's case, whatever market share they have lost, they have tried to gain other category of products. So we've been tracking it, but I don't have any view on the business as such. However, to tell about market infrastructure companies, we would rather go with the dominant network effects player than go with the second player over here.
Hi, Ronak. Good afternoon. So, I was just wondering, because BSE, the listed company, is trading, whatever you assume for the next couple of years, is still trading at 40, 45 times on. And in the unlisted market, you have an NSE that's trading at around 20 times. And you also have a dividend yield of close to around 3.5%, I think so. So, you're saying that you'd rather stick with NSE?
So you're talking about theoretical investments. We haven't invested in it yet. But yeah, we keep tracking it. We are interested in studying how the businesses work and how they evolve. So it remains to be seen in the future. If it becomes very attractive, we'll take a look at it.
Yeah, interesting. I just was asking out of curiosity as well, because otherwise, supply as well has been plenty actually in the unlisted market with NSE, though that I think that price has moved up a little bit to around 3,400 to 3,500. But Ronak, tell us, what are the changes you've made in your portfolio? The last time around, we spoke a little bit about HDFC Bank. From there, the stock is still a little bit lower. I think we spoke about some holding companies, and that's the way you would rather play some of these Bajaj companies. So what's changed? Anything new? Anything you've added on a position or maybe reduced?
So not much has changed in the portfolio. The turnover remains the same. If you see over the last 12 months, the turnover of the portfolio has been around 5% as of the latest fact sheet. So we haven't changed anything meaningfully. In the international piece, it's about 16% of the fund now. We haven't been able to remit new funds abroad, but we continue to own the tech leaders in the foreign portfolio. The domestic portfolio of financial services includes the banks, 3 banks that we own, HDFC, Axis, ICICI, as a dominant part of the financial services portfolio. And we also have, like I said earlier, the capital market intermediaries like CDSL, IEX, MCX. Those play a part in the portfolio. In IT services, we have HCL Tech, Oracle Financial Services in the FlexiCap portfolio, and the TCS Infosys, and also Infosys in the FlexiCap portfolio. But that's also, again, a part of the IT services piece. In pharma, we have a basket approach, and we have a few commodity companies like Balkrishna Industries, NMDC, Coal India, and we also have energy company like the power transmission company like Power Grid in the portfolio. So this builds a portfolio which is more or less stable in terms of cash flows that they generate, and we haven't changed too many things in that portfolio.
Okay, got that. Ronak, hi, good afternoon. Let's talk about your foreign holdings, the really interesting part of the puzzle, right? And I was looking at disclosures for the September fact sheet, and you still have Alphabet, I think that's 4.7%. You have Microsoft, Meta, and Amazon. There was a lot of chatter specifically on Alphabet just a couple of days back, right? Their cloud business not doing as well as Microsoft's. That apart, I mean, in general, there's a little bit of a worry around the NASDAQ and the kind of correction we've started seeing with yields being so high. How are you reading this, and what are your thoughts with respect to this, large cap, global blue chip technology exposure that you have?
Yeah. Cyclically, I think there could be a valuation correction in many of these companies because of the interest rates moving up. But regardless of that, if you see some of the companies, the longer term trend remain to be in their favor. So if you look at the trends in digital advertising, all 4 companies have advertising businesses inside of them. Microsoft is a smaller one, but Amazon is scaling their ads business. Google depends a lot on the ad business. Even Meta depends entirely on the ads business. The entire shift from physical media or traditional media to ads business, digital ads business continues to happen. So that continues to be a good tailwind for them. In case of Microsoft, Amazon and Google, all 3 of them have cloud computing businesses inside of them. And you're right, sometimes one will lead, the other will probably fall back. Sometimes all 3 will do well. So cyclically, yeah, we don't want to predict too much of how the cycle will turn out. But in the longer term, is the technology shifting towards cloud computing usage? The answer is yes. Most of the implementation right now is only at the areas where it's not very critically important. But now when critical software is like even the ERP systems are coming on cloud, there has to be some back-end cloud computing infrastructure available, which all 3 companies can provide. AI entirely works on the cloud. You cannot actually run these things on premise. So if you are using any AI services, you will have to end up using the cloud. Again, these are all long-term tailwinds that these companies can benefit from. And plus, they also have their own platform services on top of this, that they will sell their own softwares, they will sell their own APIs in terms of AI that they are working on to customers who are willing to build on top of that. So we have seen this trend over the past, I think 10 years at least, working in favor of these companies, and they have scaled a lot. And based on this scale, we have to see how far the growth rates can be taken.
These all numbers just came, right? And Meta's, Ronak was also talking about it, quarterly ad revenues are $34 billion. Quarterly. I was thinking of all those millions of Insta Reels. people
and all the sponsored ads that keep cropping up on your feed, right? Now we know what crazy, that adds up to.
And I wonder what would the creators be making? I mean, because they're also, at least, the ones with big subscriber numbers, etc. make, but I mean, it's a huge number. $34 billion from ad sales. Actually, the total revenues for the company are 35. As Ronak said, it's almost all entirely ad sales. Ronak, you own Bajaj Holdings. Is it a play on the group per se? Something, or is it about holding companies really? Because I mean, that's another thing which has been discussed, that delisting, etc. But I don't think that's the case here. Just tell us about this one.
So it's regarding the holding companies, as like you said, and also about the group. So there are several holding companies in India which have good underlying companies underneath them. But Bajaj Group companies have been demonstrated a very well-run operations over the past several decades. And the holding company gives you a way to own these well-run companies and these cash flows at a discount. So if you can buy something at a discount and also get the entire dividend flowing to you at the holding company level, it becomes an attractive way to own the underlying assets. But we have to believe that the underlying companies will do well. So we also track the underlying companies very closely to understand where the trends have been. And over a period of time, we have seen the gap in the underlying investments and the holding companies' value keep fluctuating. So right now, it's close to 50% in case of Bajaj Holdings. At peak, it was at somewhere close to 60, 65%, 70%. So it keeps moving around. But we don't pay too much attention to that gap closing or narrowing or expanding. We pay attention to the underlying businesses, and the discount allows us to buy it at a lower price than buying the underlying at the market price.
And this is both the financial services and the auto business, right? Yes. So you get a play on everything in one shot. Got it.
Maharashtra Scooter and Bajaj Holdings. We put out that piece on Editors Roundtable as well. Ronak, final question before we let you go. You're launching a new fund, right? You want to give us some insights out there? I think there was an NFO from your stable. So give us some brief details.
Yeah, today is the last day for the NFO of Parag Parikh Arbitrage Fund. Again, Arbitrage Fund category is a very interesting category. It acts like a debt investment, but gives you taxation of equity investment portfolio. At the same time, it depends on the arbitrage yield. So people who don't know how arbitrage works. It's essentially we buy equity in the cash market and sell futures contracts for the next month, and we get a yield because the futures market might be at a higher price. And that yield is very close to the liquid fund yield. So it's like a debt investment for investors who want to park their money for short term. Think of it like an alternative to a liquid fund.
Okay, all right, got that. Ronak, thank you very much for joining in and have a great weekend. We look forward to connecting again soon. That is the word from PPFAS Mutual Fund. We do have to take a quick break on that note. We will come back on the other side and get you a check on what dealing rooms have been sort of buzz with today. Nimesh is joining in, and then some final trading calls as we get into the last 20 minutes of trade.
Welcome back. Well, we've come off a little bit from the highs of the day. We're 30 points down, but it's a good session. Maruti has given up a goodish bit. M&M as well has come off. So let's just pull up the intraday charts of Maruti, M&M, as well as Sun Pharma. They'll come up for you on the screen. It's a good session, but some of these stocks are slipping a little bit. But let's find out what's going on in dealing rooms. Nimesh joins us to tell us exactly that. Hey, Nimesh.
Hi, Nigel. A good pullback, but again, it's from extremely oversold level. So need to see how much this can sustain. From a technical perspective, the feedback is on the upside now. 19,250, 19,300 will act as a very strong resistance. But unlike yesterday, when there was a large sell-off from the FI desk, today the flows are quite mixed. The participation is on the higher side, but I understand the flows are on both sides. But there's going to be a small market at close basket selling at a leading FI desk. So need to see some reaction to the large Nifty names because of that selling pressure. The broader market showed the first signs of recovery in yesterday's trade, especially in the second half, and that momentum continues in today's trade as well. So the broader market seems to be, a firm trend of a bit of a pullback, and that largely helps because of the domestic flow. So that space is looking good. But from a Nifty point of view, or from the Bank Nifty point of view, need to see how much this pullback can sustain. And as I said, technically 19,250 is the next level to watch on the upside.
Okay, that's the sense of the overall market. Nimesh, any stock-specific chatter you picked up today?
Well, in terms of individual names, the first stock on my list is Anupam Rasayan. There was a block of 1% equity that got changed hands. I believe person acting concerned was a likely seller in today's block, so the disclosures will be important as far as that stock is concerned. The second stock is GB Realty. Some of those realty stocks are back in action today, and DB stands out largely on back of strong HRI flows, but also there is a buzz of a large tie-up with a Mumbai-based developer very soon. So that's the reason that stock is excited. The third stock is Pratap Snacks. A thinly traded stock. You don't see too much of delivery volumes in that stock, but I understand there's going to be a large block deal very soon. The private equity owns a large chunk, and maybe they'll be the potential seller in Pratap Snacks. So that's the third one. And the last one is AU Small Finance Bank. Under pressure because of that overall market selling as well. The results are tomorrow, so all eyes will be on that. But along with the results, there is a sense of a corporate development. Remember, a few weeks back, there were reports of the bank looking at an acquisition as well. So something on those lines could be on the cards, but all eyes will be on the results as well, as far as AU is concerned.
Okay, Nimesh, thanks very much for that interesting list as always. Rahul Mohinder is back with us for short-term buy today or sell today and reverse trades on Monday when we come back. Rahul, what do you have?
I think the way things are poised, TCS looks like continues to be an underperformer, especially when you compare it to the index. So I'd say continue with the sell on TCS. The 33.70 is a strong resistance. So as a short-term trader, I'd be looking at 32.80 as a target. Go short on it. Stops above 33.70, like I mentioned. On the buy side, individual names definitely come to mind, and one of them is Bank of India. I was just looking at the kind of volume that it's clocked over the last 4 or 5 sessions, well above average. So, that's definitely trying to say something. And, my sense is we could have a short-term relief rally to about 101, 102. So go long on Bank of India. I'd keep a stop loss of 92. This may not be a tomorrow trade, but, definitely a short-term.
Okay, TCS and Bank of India. Thanks very much, Rahul, for that. Well, let's just move only slightly away from markets for just a quick bit. Legendary director Martin Scorsese's new movie, Killers of the Flower Moon, which is based in 1920s America, is released today. My colleague Jude Sanith is joining in all the way from Chennai. Jude, are you at the movie hall? Have you watched it? Are you going to watch it? Tell us more about this one. This is going to be a big one, not just because it's a Scorsese movie, but also because it's got a stellar star cast.
Absolutely, Prashant, and I will be watching a little later today, but let me give you a quick update as to what the movie is all about. Firstly, a fair bit of release action this Friday, of course, both in theatres and OTTs. There's the Kangana starrer Tejas, even as Spain Hustlers on Netflix, and the Enfield Poltergeist is making its way to Apple TV+. But my pick for the weekend, like you mentioned, is Killers of the Flower Moon. It's the brand new Martin Scorsese film, and here's why it's important. It marks the 6th occasion that Scorsese is teaming up with his muse of sorts, that's Leonardo DiCaprio, even as fellow Oscar winner Robert De Niro makes up the other half of the star cast of the film, even as supporting acts from Brendan Fraser make up for the rest of the cast of the film, along with Jesse Plemons. The film, like you mentioned, is set in 1920s Oklahoma. It follows the aftermath of the murder of a Native American family and the FBI investigation that follows. It's expected to have all of Scorsese's signature filming traits, much like visual brilliance, a tight plot line, and also Scorsese's focus on themes like crime, corruption, and overall drama within the setup of a family itself. Remember, it's the 6th time that both Scorsese and DiCaprio are teaming up. This is the team that brought us hits like The Departed, The Aviator, and also the memorable Wolf of Wall Street in 2013. So it's also the first time in 10 years that this duo is making a comeback. Remember, the film premiered at the Cannes Film Festival a little earlier in the year, where it received widespread critical acclaim. Its runtime, though, is 3 hours, 26 minutes, so you might want to factor that in should you decide to make a visit to the theatre later this weekend.
Well, I'll be heading to watch this one. I don't know tonight, but maybe, I don't know. But it's interesting, right? For movie halls as well. By the way, if you check Oppenheimer on, on Book My Show or wherever, they're still running.
Oh,
it's
it's releasing on
2-3
OTT,
months, right?
I thought. It's finally making its way to OTT platforms.
You got to travel a little bit, but it's still running in a theatre or two in Mumbai. And now, of course, this is the next big one. So let's see how this one does. But there's 11 minutes to go for close. We'll take a very quick commercial break here. Sudeep Bandyopadhyay will be with us with more on markets when we return. Looking strong so far.
Welcome back. Well, we're going to be winding down a rather good session. So that little bit of a dip that we got bought into. We have India Mart, the numbers flash for you on the screen. Margins have held at around that 27-odd%. The management has been telling us in the past that we may not head to that 35% plus, but we'll see gradual improvement. For the time being, it's holding in the high 20s. So, and the stock, in fact, has come off a big deal from the top. So, I think for the time being, the street has read that positively. Sudeep Bandyopadhyay joins us to help us out with some quick fundamental analysis. Sudeep, I wanted to ask you about SRF. You know, the numbers came and they were a little lower than what the street was working with. But what the street has latched on to is they've announced a capex. And also in their commentary, they're saying second half of the year will be far better. You track this one?
We do actually, Nigel. And in fact, the entire specialty chemicals and chemical space has been, going through a terrible phase, I would say. That was used to be the darling of the market, and pretty much everybody was banking on China +1 and whatnot. While looking at this sector, the developments have been pretty positive over the last 1.5 years, but last 6 to 9 months have been disastrous for the industry, pretty much because of what's happening in China, the lack of demand, and Chinese manufacturers are trying to dump the product all over the world. And also, slowdown in demand in Europe. But I think there is a bit of a silver lining visible now, and things are improving in multiple geographies. That's probably the reason why SRF management is confident of putting up new facilities as well as the year going forward. And I think the signs of that are pretty much visible in all the other specialty chemical companies also. But we have to remember that things can change very fast. And I personally would advise a bit of caution as far as these generic specialty chemical companies are concerned. If somebody has to, look at this entire space, then probably CSM companies like a PI Industries should be looked at.
Okay. All right, Sudeep. Hi. Just a couple of minutes ago before the day closes out. Tell us, in terms of all the earnings that we've seen, quite a few of the mid-cap ones. Today we're getting some very good reactions on, for instance, Canara Bank, Shriram Transport Finance has been doing well. Even Colgate is up and about. Anything that has stood out for you in terms of mid-cap earnings so far this season?
Well, I think the banking BFSI space definitely stands out, and pretty much the market was also sure that BFSI will continue to deliver a good set of numbers, and that's what has been happening. Some of the numbers coming from some of these companies, and also I would like to bring in the example of IndusInd Bank. I think fantastic set of numbers, and the kind of growth they have shown quarter on quarter for the last almost 2 years is quite amazing. And asset quality has been improving, the margins have been improving, loan book has been increasing, and the management stability also has come in, whether it's IndusInd Bank or whether it's some of the other smaller banks are concerned, whether it's CSB or South Indian Bank, pretty much everywhere. So one should continue to look at mid-cap banks and mid-cap NBFCs as well. There may be a little bit of turbulence, volatility in the short to medium term, but somebody is a long-term investor, I think it's a good opportunity to accumulate some of these stocks at current levels.
Dr. Reddy's numbers are flashing at the bottom of your screen. EBITDA seems to be slightly better than what was expected. I think there is about a 7-8% beat on EBITDA. Margins seem to be substantially better as well, closer to 32% compared to the expectation, which was around 28% or so. We'll have more with Ekta coming up in just a bit, but that's a big pharma number coming through towards the fag end of this Friday's session. As I said, we'll dig in deeper with Ekta. But Sudeep, if you want to comment on this move that we're seeing on Shriram Finance, one of the largest lenders, was, markedly cheap as compared to the other large NBFCs like the Cholas of the world. Not so much now, but the gap is still there. Any thoughts?
No, I think it's as I was just mentioning earlier, that Shriram Finance definitely merits a look, and I think with the kind of incremental vehicle injection into the system, both through public sector as well as private sector, Shriram Finance's opportunity basket continues to increase. the environment has been very, very supportive as far as Shriram Finance is concerned. Overall asset quality has improved, and on a peer comparison, you are absolutely right. It does look attractive, and from a long-term investor's point of view, there is very little that can go wrong as far as Shriram Finance is concerned at current price levels. Also, I must mention the stability and management and the experience of the management in running this particular, I would say kind of a niche NBFC business is quite commendable and quite, something which should be looked at.
Okay, all right. Sudeep, thanks a lot for joining in and filling us in with those details. A short but effective chat. Wishing you a good Friday evening and a good week ahead as well. Well, let's wind you down in terms of markets. Finally, we end on a good note. The last 6 sessions were brutal, so to call it. The Nifty was down 950 points. Today, we pulled back close to 200 points out of that. What did well? You had tech as well as banking names that did well, and that's why the Nifty ended higher. HCL Tech, Axis Bank, SBI Bank, all of them did well. Besides that, Adani Enterprises and NTPC as well did pop up and trade. And big boys, Reliance Industries and Infosys, they did the heavy lifting. What didn't participate? UPL, a little bit under the weather. ITC as well seems to be losing its way after it hit that 500 rupee odd mark, hovering around the 430 odd mark. But from the broader markets, guys, there was plenty of action, isn't it?
Oh, absolutely. And the broader markets did well. 1.5% up on the Midcap index and a very solid advance decline ratio. 2,400 stocks advancing, just about 500 stocks declining. So let's see what worked in Midcaps. A lot of the PSU banks have had a great session once again. Many of them have come out with good numbers and the market has liked that. Look at IOB, 7% after the result release today. It had good company in the form of Bank of India, Union Bank, 5-6% up on these. UCO Bank, PNB, 4 to 5% on these stocks as well. Even Bank of Baroda, actually, 4.5% there as well. Financials in general did very well in the mid-cap universe. L&T Finance, 4%. RBL Bank, 4%. So this was a solid part of the market. Lemon Tree Hotels, 5% on the upside, doing quite well. If I talk about some of the interesting result reactions, then Shelby really stands out. Shelby Hospitals, good numbers there, margin expansion, 8% up on that stock. Venus Pipes from the smaller cap universe, about 7-8%, looking good. And Karnataka Bank is raising some money, 6% up there as well. So on the mid-cap side, plenty of flurry.
Well, going home on a hi, right, guys? Well, that's it on this edition. A closing bell from all of us here. Slip into that quick commercial break here with more coming up on the other side.
Where this mic? Just where this mic.
2 mics?
Yeah.
Oh. So then, then it's first it was just about markets. Then it started picking up with a lot of youngsters, a lot of millennials.